Welcome, realtors, clients, anyone who may be watching. Today we got a good one for you guys. Let's get right into our update for June/July. So, as I'm sure you guys have already guessed, this video is going to be talking about the impacts that we have seen in the mortgage market with regards to the rate drops that happened last month. Now, I'm sure that you guys have seen, multitude of videos or TikToks or Instagram Reels or whatever you guys are getting your information from. I'm sure you guys have seen, those infomercials, if you want to call it that, last month. Well, it's really hard to predict things in the future, and it's really hard to talk about where things are going to go. But what I want to do for you guys today is kind of, present to you guys exactly where we have seen things go in the last month, right? Because if you guys seen those videos that came out the day before, the day after those rate decreases happened, really nothing much changed in the market. But now that we're a month out, I can really talk about, the actual changes that I've seen out there, with the mortgages that I've secured for people over the last month, and what I've seen from my colleagues. So let's get right into it. I'm trying to keep it short and sweet for you guys today, and get all the information in a short and concise way so that you can get in, get out, and hit the field with all the information that you need to know. So let's get right into it. So first and foremost, why did the Bank of Canada feel as though things were primed for a rate decrease? Well, obviously, you take a look at the graph here. You guys can kind of see, since 2023, we have essentially a new normal in and around that 3% target. And the last numbers that they had to work with was, if you guys take a look at April, that 2.7% mark for inflation. So it was on its way down. Unfortunately, since they've dropped rates, another inflation reading has come out for the month of May at 2.9. It is a little bit higher. Please note though that the way that they have calculated inflation did change a little bit. I don't know too many of the details, but I know that that did play a factor in those readings. But all in all, things did go up. But again, these are not sustained trajectory up. And for the most part, as per the Bank of Canada, things are on their way down, and they are going to continue to be decreasing rates. Take a look at what I have in red here, and feel free to jot that down in your notes, because those are going to be some pretty significant dates that you guys are going to want to keep an eye out. Of course, those Bank of Canada meetings on July 24th and September 4th is going to be the next one after that. But leading up to that July 24th meeting, you guys are going to want to take a look at that Tuesday, July 16th, because the CPI is going to be coming out for the month of June, and the Bank of Canada is going to be definitely taking a look at where that reading comes in, and if it's good, then it does definitely open the door for another July rate cut. Now, I will say this. The Bank of Canada is not going to be doing an aggressive rate cut like they did those rate rises. Those rate rises, they did it. They rose rates every single meeting consecutively for a sustained period of time. That's not the case here. These guys are going to be taking a look at the data as it comes available to them month by month, and adjusting their targets accordingly. So this is going to be a long and drawn out decrease as we, get towards rates that are more into the 4% range. Rates going hopefully into 3%, as we go into 2025. Now, I've had a couple of realtors, clients alike, ask me, hey, the Federal Reserve over in the U.S., they're not going to be decreasing rates. So does that mean that we, are going to have to hold off on our rate cuts? Well, as you guys, have heard, the Bank of Canada mentioned that there are limits to how much we can diverge from the Fed. Now, Tiff, the governor of the Bank of Canada, he mentioned that there are limits, but we are nowhere close to those limits to how much we can diverge. So again, it does keep the door open for further rate cuts, but they're going to be hesitant. They're going to be keeping a look at the data month to month. Anyone that tells you they know for sure is lying to you. Now, with that being said, what are rates saying? That's going to be the biggest thing, right? Clients are really invested in their rates. They want to know exactly what rates they can get, assuming that, everything has kind of started to come down in the market. Now, I had people reaching out to me the day after the rate cut. Hey, can we decrease our pre-approval rate to increase our buying power? Hey, can we secure another rate? And, it was funny because, the week of, there was really no changes, and even the week after that, not too many changes. Now that we're about a month away since that rate cut, I have seen a material change in the market downward. Now, take a look. If you guys see, I've posted at the top 5.54 for a 3-year rate. Those are Scotia rates, and that's what I'm mentioning to clients. Hey, these are where rates start. This is what a Scotiabank or a TD would put on their rate sheet, and that's where rates are starting. Now, of course, once I have a live deal, we're able to negotiate rates further, and that's going to be, where the rate comes in is going to depend on a deal by deal basis, right? Factors like, their mortgage amount, factors like credit, income, etc. That's all going to go into the decision of how much we can push those rates down. Now, I've included here, just last Friday, I was able to secure a 4.79% mortgage on a 30-year M. It was a 3-year term, and that's the lowest I've seen it. Just a couple of weeks ago, people were quoting clients for insured deals, right? So CMHC insured mortgages 4.99. Well, I was able to get 4.79 on a 30-year mortgage, 3-year term. It was not insured. It was a conventional deal. So again, we have seen rates come back down. 4.79 is the best I've seen it. Granted, it was on a larger size mortgage, right? The mortgage amount was about $1 million on the mortgage amount. So if you're coming in with a 300K mortgage, 100K mortgage, you're not going to be, seeing those rates. But again, we can get in and around that 5% mark, 4.99. If we can get below 5%, you're looking good these days. So that's about where rates are at. So the last little bit of news that I'm going to provide to you guys here today is news that came out last week from Doug Ford and the Ontario government about rental increase caps. In 2024, the cap was 2.5, and that's going to be the same for 2025. It's going to be capped at 2.5%. So I've included a breakdown. If, let's say, you are paying $3,000 on your rent right now, your landlord can only increase it by $75 essentially, right? That's 2.5%. So what does that mean for people, especially for clients that have rentals that are coming up for renewal in 2025? A large majority of people have rentals that are coming up for renewal in 2025, and that means that they must have secured a mortgage back in, let's say, 2020, right? 5-year mortgage. If you secured a mortgage back in 2020, you're probably looking at rates around 2%, 2.5%. In 2025, hopefully we're able to, decrease rates to around that 4.5 mark, maybe even lower. But the bottom line is, you are despite where rate decreases are, the bottom line is going to be that you're going to be paying a little bit more in interest. And I guarantee you, whether it's a 1% raise, a 2% raise, or essentially doubling the interest rate that you have now, I can guarantee you that your mortgage payments, if you were to just do a simple renewal with your lender, it's going to be more of an increase than just $75, right? So that's why I wanted to bring it up to you guys today, because there are options available. If you do have a rental property and you're not looking to bleed money on this, you want to keep your cash flows the same, if not better, reach out to me, because we do have options. For example, instead of just doing a straight renewal, you can refinance. You can stretch out your amortization. You can even pick an amortization that isn't necessarily 30, but let's say you have a 15-year amortization, maybe boost it up to 20 so that your payments are, at least covering the increases that you're going to be getting on that mortgage payment, right? So just so that everything is lined so that your cash flows are the same, this is something that we're able to do for you, and essentially choosing the payments that you're going to pay on that mortgage so that essentially it makes sense for you guys, right? So I said I wasn't going to talk much. I do love to talk, but I'm going to try to keep it short and sweet for you guys. If you do have any questions, feel free to reach out. I hope I was able to provide some value for you guys. And if I was, please smash that like button, give me a subscribe, and again, reach out for any inquiries if you guys have. Thank you so much. Bye-bye.